Welcome to TradeHappy, a community of traders learning how to be profitable and happy. Today we're going to be going over an in-depth strategy. I know that I've talked about some strategies in the past in some of my videos, but I think it'd be good to go over them in more detail. So that's what we're going to be doing today. We're going to be going over order blocks, round numbers, the trend, Fibonacci, trading on multiple time frames, having the patience, and how to actually buy the market or sell the market when it's moving against you. So let's get straight into it. We're on Euro AUD. The first one we're going to be having a look at is order blocks, and basically how to find order blocks. Obviously I'm no expert in this. There's many people out there that I'm sure trade order blocks in many different ways, but I'm just going to be showing you how I find the order blocks that I use. Let's have a look at the most recent one up here. The way that I do it is look for a move down, a large move down like this candle here. So we've had a nice bearish candle, bigger than all the candles in the past, and I would take this candle right here. So it's the last candle of the big move down, and I basically go from the high of the body, not the wick, down to the low of the body and draw that out. Let's just draw that out now. So there's an order block. So basically I wouldn't be looking for any buys until we got into this area here. Let's just have a look at some others, if we can find any. So here's one actually that I'd probably be having a look at. So I tend to, so right here, let's say you're looking in here. This is not a good example because as you can see, like, it's got a massive wick going from up here all the way down, and then we've got another big bar after that. So that's not really something I'd be looking for. This is more what I'd be looking for. We've had a move up and just a really clean move down. So we've got a high in here, and I'd be drawing the order block from the high again down to the low of the actual body, and just drawing that out. So let's have a look at a buy one. So again, right here, this is too big. So the wicks on this is too big, so I wouldn't really be having a look at that. This could be one, but then you've got a nice little short low here, so I wouldn't really be having a look at that either. Here's another long, but actually there's a short one there. Have a look at this one. So drawing that out. So then another way to use order blocks is also, so if we go over here, you can see prices move down and traded through that area, and then it's come back down and touched the area and bounced off. Same one here, it's gone through the area and bounced off. So that's kind of the way that I'm looking at order blocks. So I like to see a move down, and then we break that area, and then we can come back and retest. Normally I'll be adding Fibonacci to it as well, and a couple other things that we'll go over later in the strategy, but just to start off with, that's how I kind of look for order blocks that I trade myself. Let's see if we can find another one. So here's one that I'd be having a look at as well. I know that these are all on the short side, but you kind of get the idea of what I am looking for. Oh, close that. So again, move down, and it's actually just bounced straight off of that area, and we've tagged it here as well, and then we've finally broken through. So yeah, it's not an exact thing, and you need to add other things to it to make sure that it's going to be like a good strategy for you. But that is something I look for. So there's one right here as well. Draw that out. See if we can get any tags on it. No, we're nowhere near. But still, that would be an order block that I'd be looking at. Let's try and find another one. here's one, but we haven't really... It is a good one, I guess, considering that you've got the move up, but it's not been a... It wasn't a really nice move up afterwards. So it's not a great level, so I would be looking at other things to make sure that that would be a good trade setup for me. But again, that's kind of up to you and what you kind of trade. But for this strategy, you know, you got to line it up with other things because you don't want to just be trading off order blocks. So you get the general idea of what we're looking for. So the next kind of part to this strategy, I guess you could say, would be round numbers. Let's just get the horizontal line here. So let's have a look. So 1800. And then I'll be looking at 1900 as well. And basically you would do that all the way down and fill out your charts using this. So this is something that is kind of good to do when you're just starting, I guess you could say. So when you've just opened up your charts and they're completely fresh, this is a really good way of just putting support and resistance lines on, but without actually doing, you know, the general support and resistance that you kind of see online. But let me just delete that for a sec. There's obviously levels inside of this, so you could do the 50 level as well, and then obviously 1700, and just kind of go down your chart and just do that all the way down. And you'll see little levels like right here. Perfect. Inside of an order block as well. Round number. Obviously we need something else to go along with that, but you kind of get any idea. So looking at this example right here, if we were going to trade this, this would be an area that we would be looking at for a bounce. The reason for that is Fibonacci. So if we put our Fibonacci on, you can see right here, 62% level inside the order block and close to a round number. So I'll go over that in a second, but you kind of saw a sneak peek of what the strategy is. But let's just carry on putting levels on at the moment, just to illustrate the point. But as you can see, the price kind of respects these, and in the box it's really clean. Like you'll get super like this basically. You'll get super clean support and resistance levels, and it just doesn't happen. So I would class this as a support level, when most traders wouldn't, because it's kind of bounced around in this area. But it's not an exact thing. But it's definitely something that you should think about when you're trading, and don't look at it as exact numbers, just because you'll miss trades that you were correct on. If you've got into a trade and it's, you know, moved in the direction that you were thinking it's going to go, and you're 10 pips out, was it worth doing that? Was it worth actually waiting that extra 10 pips before getting into the trade? Or was it better to think, right, this is a zone of support that I'm looking at, and it'd be better to just get into the trade for that 10 pips. So I hope that made sense a little bit. So what was that? 81. So you get the idea. So the next one is the trend. The next part of the strategy is the trend, I should say. So you've got all this set up, and this is a really nice up move. So you've got higher highs and you've got lower lows. It's not going to be exact, so right in here you've got two highs that are pretty similar, but overall it's going up. and this would be something I'd be looking for. So if we were, let's say, this point in the charts, I might buy depending on the setup that I got, but let's say I didn't and we broke the high here, I would then be looking for a continuation on that trade and looking for a buy signal. It's really easy to spot a trend. It's kind of the way that I do it would be, right, from down here and we're up here now, how is the market looking? If it's generally going up, then I would class that as an uptrend. I'm not really someone to say, right, we need 3 higher highs, 3 lower lows, no, 3 higher highs, 3 higher lows, and then we've got an uptrend or something really specific like that. I kind of just look at the charts and say, right, is this going up generally? If it's a yes, then I would class that as an uptrend and I'd be looking at longs. Obviously, if it's going down, if it's generally going down, then I'd be looking for shorts instead. But that kind of gives you an idea of the way that I'm looking at trends. So you've got your round numbers on, you've got your order blocks sorted on the charts, you've figured out that it's a uptrend as well. So now the next part is the Fibonacci. So let's just come down here for a sec. So the Fibonacci that I use are these levels right here. You can put these into your trading view or MT4 and use the same ones as me. I've got this from another trader, so these aren't the numbers that I've figured out to be really nice or whatever. It's just kind of numbers that I've seen other traders use, and I've used it for a while now and I've just been trading that way. It's not exact, so I know that some people use 72, 61, 80, it's kind of around that area, but these are the ones that I use. The 71 is the number that I'm having a look the most. This is the area where I'm looking at to trade, hopefully. 62 is a zone where a trade is setting up, and I might put in half the position on the 62% and put a limit order for the 71% for the extra 0.5%, or whatever percentage you're doing. Try and split it up between these two, 62% and 71%, because again, like I was saying earlier, is it worth you saying, right, I'm only going to get in on the 71%, if it goes to 62 I'm not going to get in, and it goes to 62 and reverses perfectly and it's a winning trade? Was it worth that tiny little amount just to get it at the 71 and not 62? I guess that's down to you to decide, but for me, I like to split it up. And again, I'll put stop loss down here, and the take profit will scale out. So I'll take a third off once we get to the high, take another third off once we get here, and take another third off when we get to a symmetrical move. That's just the way that I do it. Again, learned it from other traders, it stuck with me, and that's just what I've been doing. So, getting back to this trade, let's put the Fibonacci on. I don't do it to the wicks, I do it to the bodies. So the lowest body here, I think that probably could be a Sunday, so I'll skip that. So it's this one here. So we'll put that on the body, go up to the high of the body as well, right here. And then I'll be having a look at inside this area here. So if we zoom in, this is my original order block, and what I'll do is I'll move it like this. There's 71% if I can get it, and then I'll move in this one down to 62. So now, instead of being from here to here, we're now in between this little zone here. And let's just put that back. So half position on here, half position on here, and basically you just sit and you wait for the market to come to you. I like to put limit orders in, because if you can imagine you're sitting here and you see this bar right now, most people wouldn't buy. Most people would not buy. If it was down here, that whole candle was just bearish, you just wouldn't buy because it's scary. And you know, you're sitting there and you're watching this thing fall down, and you're thinking, wow, okay, that's gonna go straight through my area, and if I buy now, it's just gonna hit my stop loss. So what's the point? And you're just letting emotions come into your trading. So what I like to do is just put a limit order in there and go and do something else. And what will happen is you'll find that you'll actually get better entries by putting limit orders in, because you're not doing emotion. Because if you put a limit order in and go do something else, you don't know what the market's doing. If I put a limit order in around this time here, so let's say that I saw the markets like this, and I saw the market starting to come down, limit order in here, and just went and did something else. When the market is shut down like this, I'm not sitting there at my computer watching the market go down. I'm going to go do something else, and it's just going to tag me into the trade, and I'm away. But it's important to come back to the charts, obviously. Don't just put a limit order in and go do something else for however long. Come and check your trades and keep on track of your trades. Trade management is really, really important. So what I'll do is I'll maybe check my phone maybe once an hour, once every few hours, just to check if I am in the position. And when I get to a computer, then I'll have a look at the markets and analyze it that way. I'm not someone that trades on their phone, just because I don't really like it. I can't see enough of the markets to actually get a good judgment of it. I like to trade on the PC. So anyway, if let's say you're in this trade now, and your stop loss is down here, what is the point? Let's say the market is up here now. What is the point in having your stop loss down here? Just move it up. So what I would do is move it up to the 79%. So as soon as I'm in the trade and I see the market moving higher, I'll quickly move my stop loss up. And as soon as we get to this level here, so back up to the highs, I'll put it at break even, just to cover the trade, because you don't want to let a winning trade turn into a loser. So it's really important to just move your stop loss to entry and just forget about it. It helps with emotions as well, because if you know that you can't lose anything on a trade, you've got nothing to worry about. The trade's just going to do what it's going to do. If it's a winner, it's a winner. If it's a loser, then you don't lose anything. It's a win-win. So yeah, move your stop loss to it, entry, and just forget about it and move on to the next trade. That way you don't have to actually manage the trade anymore, because it's already been managed. And once you get up to the stage of actually withdrawing partial profits from that trade, then you can start to have a look at, right, what's the market doing? Should I take off a third? Should I take off half? But a good thing about this strategy is you've got your 3 levels where you're going to be taking profits off. So take a third when it reaches the high, take a third up here, and third here. What you could do also is just take off a third here, and then leave a third on. And then just do a trailing stop, whatever you want to do, however far your stop needs to be. Just trail that up when the market moves. Because obviously leaving a little portion on. So if we went back here, let's say you got in here. I can already tell you that this would have been a nice trade. We'll go over this one in a second, but yeah, so let's say you're in this trade, third, and you're out. So you've just missed all of this here, and the market could keep going. So keeping a third on can be quite good, but if you just want to get out of the markets and move on, then happy days and just do that. So obviously this is on the 30-minute. You can do this on the daily, you can do this on the hourly, you can do this on 15-minute, 5-minute, weekly, whatever you want to do it on. The pattern that I've just showed you is on every single time frame. But the 30-minute and the 15-minute are my personal time frames, just because I like to have those round numbers. And if you're on the daily, those round numbers are a bit too close, and you might have to spread those out a bit. So For me, the 30-minute is a really nice time frame because you've got the clean candles, you've got everything coming through really nicely. So that's just the time frame that I trade. Yeah, so let's have a look at this one down here. So it might not have actually hit the order block, but no, it doesn't. But anyway, still a really nice trade. Let's just move that up. Fibonacci. So you've got the round number here. Let's stick the Fibonacci on from the body, low of the body, up to the high. 71 right here. So as I said before, the 71% is the one that I really do like to trade the most. If the market does come down here, I'll just be putting my full amount on. But obviously you don't know that until it's actually hit it. The market could have reversed right here. But I think when you actually combine all of your analysis, this is the zone that you would be looking at. So I would be expecting at least the 71% to be hit. But then you've also got little zones in here. You've got consolidation and then a move higher. There's actually another order block in here, right at the 79%. So trade how you would, but there's many different ways to trade the strategy. If you see a consolidation area right here and you want to get in up here, go ahead, put on a smaller amount of risk though, because obviously if there's an order block down here and it's been tagged before, there's a good chance that it's going to come down to that level anyway. As you can see, your stop loss wouldn't have been hit. And let's have a look if you're perfect. So symmetrical move all the way up. Really nice trade. You would have got in here, ridden it all the way up, and you would have got out right there. So super nice trade right there. And then you would have got in again here, and you would still be in this trade. Depending on when you want to move your stop loss might even still be at break even. I would probably move it already. After seeing this candle here and seeing the move higher, I would have just moved it to entry and just forgotten about it, because the faster I can move it to break even, the better for me. The faster I don't need to worry about a trade, it just frees up your mind to go and do something else, go and have a look at other trades, and not have to worry about being in a loser. But again, you need to make sure you're not risking too much, because you don't want to be paranoid about moving the stop loss to break even. It's very important to not risk too much. But yeah, that's kind of the strategy just on Euro AUD. So right there you've got from the 12th of March to the 14th of March, 2 setups right there that are both in profit. Let's see if this one's a trade actually. So from this low here up to that high, yeah, so 71% hit and 62% hit. So again, you'd still be in this trade and your stop loss would hopefully be at break even by this point. Let me just get rid of all the other stuff because it's getting a bit messy. So again, stop loss down here, entry here, and you're still in the trade. You would have taken a third of your profits off here and move your stop loss to break even. So again, 3 trades right there, all of them in profit, none of them hit your stop loss, and yeah, that's on one pair. And you've got all of these are the only pairs that I do trade, so you've got all the other pairs that you can be having a look at whilst you're in these trades. It's a really nice strategy. Obviously we're going into more depth in the course that we've put out and the one-to-one mentoring, but this is a really nice strategy that you can follow. If you're a beginner, it might not be a good strategy to start with, just because you've got order blocks and you've got, you know, finding a trend, finding Fibonacci retracements, buying when it's coming down, and a newer trader might not have the psychological mindset yet to actually be buying when the market is shooting down like this. But if you've got the discipline to just put in a limit order and forget about it, then I suppose you don't really need to be worried about actually buying here. So, I mean, it's a good strategy. If you're willing to, you know, follow the plan and stick with the discipline, it can be really profitable. I'm not saying you're going to make money with it, because obviously it depends on what you're doing. But I really like it. I've been using it for a while now, and I've found success with it. So, again, have the patience to actually learn the strategy. Go into a demo account first and practice this. Don't take my word for it. Actually put in the time to learn the strategy and trade it how you will trade it, because not everyone's going to be trading it the same way. You might not find the same setups as I do. You might find different setups that are profitable. So again, I hope you enjoyed the video. If you did, hit the like button. Remember to subscribe. We come out with weekly videos. Remember to join the Discord community. We've got traders in there posting trading setups. We give tips to all of our traders. We help them with their setups. So again, thank you for watching, and I'll see you next week.